Last year, this protocol generated $44.6 million in revenue, real fees, real users, real money. Today, it is priced at $225 million. That is a price-to-revenue ratio of 5. In crypto, that almost never happens. Gramp has been sitting with that number for some time, and somewhere in this analysis, there is a signal so fresh that the market has not had time to price it in yet. We get to it after the pillars. Yield. Every asset that generates yield, a bond, a stablecoin, a staked token, has two things inside it: the principal and the future earnings. Traditional finance has been splitting those two things apart and trading them separately for $400 trillion worth of reasons. Nobody had done it on-chain until this. Pendle. Price, $1.35. Market cap, $225 million. Down 82% from all-time high, and the protocol still works. The revenue proves it. Let us find out what happened. Pillar 1, the idea. Every yield-bearing asset has two parts, the principal and the future earnings. Pendle splits them. The principal token gives you a fixed return, locked in, guaranteed. The yield token lets you trade the future earnings. In DeFi, Pendle invented it. 5 years. No direct competition at scale. Half of all yield trading flows through this protocol. That is a market share number, not a claim. Pillar 1, 8 out of 10. Pillar 2, the math. $225 million market cap, $44.6 million in annual revenue last year. A price-to-revenue ratio of 5. For a protocol with no direct competition, generating real fees, that ratio is either a trap or an opportunity. Pillar 2, 6 out of 8. Pillar 3, dilution. This one surprised Gramp. Every team token, fully vested. Every investor token, fully vested. September 2024. That was 18 months ago. The remaining supply is not a VC waiting to exit. It is a liquidity incentive fund, releasing slowly at 2% per year. At current revenue, buybacks almost cover the new supply. At any meaningful DeFi recovery, they more than cover it. No cliff unlocks. No 21st of every month drip. The worst dilution pressure in Pendle's history is definitively behind it. Pillar 3, 6.5 out of 8. Pillar 4. Who is paying attention? 21 shares listed a regulated Pendle exchange-traded product on the Swiss Stock Exchange in October 2025. Arthur Hayes, the most followed DeFi capital allocator alive. Almost $1 million, publicly confirmed. Aave, the largest lending protocol. When they raised the cap, it was fully utilized within 1 hour, and this month, Grayscale. Pillar 4, 6.5 out of 8. Now the honest section. Peak revenue, $4.4 million per month. Revenue now, $552,000, an 87% decline. Gramp will not dress that in comfortable language. When DeFi yields were 20%, traders queued. When yields compress to 5%, the queue shortens. The protocol did not break. The market it serves temporarily contracted. This is a cycle, not a collapse. Traction, 5 out of 6. Token economics. 80% of every fee this protocol earns goes to buying Pendle on the open market. Powerfully net deflationary. Token economics, 5.5 out of 6. Team, $3.7 million raised in total. $44.6 million in revenue last year. 12 times annual revenue on total capital raised. Team, 3.5 out of 4. The verdict, paradigm shift, 8. Moonshot math, 6. Dilution, 6.5. Institutional backing, 6.5. Traction, 5. Token economics, 5.5. Team, 3.5. Total, a 41 out of 50. Strong conviction, joint second in the series. VeChain 41. Pendle 41. The same honest score. One from enterprise production. One from massive revenue on small capital. And there is still the signal Gramp promised you. In April 2026, Grayscale published a list. 30 assets considered for investment products. They trimmed the list from 36 to 30. Pendle survived the cut. Grayscale manages over $20 billion in crypto assets. When they launch a product, capital that cannot legally touch this market directly enters it. That has historically moved prices by multiples, not percentages. This list was published this week at $225 million market cap. Gramp had to close the ledger for a moment. The risks are real. Revenue has fallen 87% from its peak. If DeFi yields stay compressed, that recovery may not arrive soon. And Grayscale consideration is not a launch. This is Gramp's honest analysis. Created using AI tools. Gramp is a fictional character. It is not financial advice. Next week, a protocol that solves a problem most people do not realize exists. The score is the highest in the series since episode 1. See you then.